I don't really think that Bitcoin's going to be currency in the U.S. ever, nor do I think it should be. I really think, logically, it should be treated as property. It's like owning a building or owning a bar of gold or owning a share of stock. It's property. And what it's doing is it's demonetizing other forms of property. If you have $1 million and you have to choose whether you buy collectibles or a house or a second house or an ETF or a share of Apple stock or start a business, or buy art, or buy a bar of gold, or buy Bitcoin. That's the fungible decision you have to make. Where do you want to store your monetary energy? And clearly my message, I even posted today, it's like gold is no longer a store of value for monetary energy. That's why it's up 0% in a year where the S&P 500 is up 400%. It's pretty clear the marketplace thinks that stocks are a better store of value than gold, and the marketplace thinks Bitcoin is a better store of value than stocks. So ergo, digital property is demonetizing other traditional assets. And I think that the way the world will revolve is eventually they'll figure the best architecture for digital property is proof of work, decentralized Bitcoin mining, or mining in general. And I think the architecture the world's going to adopt for applications is proof of stake of some sort. Lightning is a proof of stake network. It's just staked with Bitcoin. These other staking networks, they're staked with something. I happen to think if you're going to have a staked network, you're better off to stake with a financial asset that is uncorrelated to your network.
According to Michael Saylor, Bitcoin should not be regarded as a currency but as property. He argues that Bitcoin's inherent superiority positions it as the quintessential form of monetary energy, set to surpass all other forms of property. Saylor predicts a 350x increase in Bitcoin's value over time, emphasizing its role as digital property akin to real estate or physical gold. In his view, Bitcoin is already displacing traditional assets as more individuals opt to store their wealth in this digital form. Saylor further contends that as countries increasingly adopt Bitcoin, its status as property will be solidified. Stay tuned until the end of the video to learn more about Saylor's insights into Bitcoin's future adoption by nations.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think you're going to see digital property, digital currency, and digital applications. Digital property is Bitcoin. It's like the block of Cyber Manhattan, and it'll be based on a proof of work network, and it'll be mined. And digital currencies, they're going to be stable coins and CBDCs. With digital property, you optimize it for integrity and durability. Well, you want it to last for 1,000 years. Like the city block in Manhattan, it's on granite. Manhattan's built on granite. That's why it's still there 300 years later, because you can build something, it's still there. You don't build on sand, you don't build on clay, you build on granite. Do you want it to move fast? No. You don't need it to move fast. Does it need to be functional? No. It needs to be inertial. If I'm going to lean on something, I need to know it'll be there in 100 years. What happens if you build on sand? Well, what happened at Surfside in Miami Beach a week ago, right? That's what happens, right? It's riskier. You build on granite, you build steel, heavy. That's property. The currencies are going to be optimized for compliance and compatibility. You got to do transactions, and you're going to get KYC, AML regulation. And I think you can expect most countries, they're going to wrap any exchange and any functionality around stable coin with AML KYC, because it's just natural, because they want to make sure the capital doesn't evade their tax or their regs. And then I think you got digital applications, the smart chains, the smart contracts, DeFi, all the functionality. Well, applications are optimized for functionality and performance. I need to do 1 million transactions a day. I need to do 1 million a minute. I need Turing complete. I need to do flash loans. I need to do stuff. If they're a platform, they're wanting to be the building on the city block in Cyber Manhattan. Because what can I do with a building? The Rockefeller Center is standing in Manhattan. It's nearly 100 years old. The city block is 1,000 years old. The Rockefeller Center will probably stand another 100 years, but maybe not much longer than that. A lot of businesses have come and gone in the Rockefeller Center over that 100 years. Insurance companies, banks, discotheques, restaurants, membership clubs, condos. So digital applications are either a platform or they're an application. And the question is, are you making an investment for a 100-year time frame? Are you wanting to own the building for the next 50 years? Are you wanting to own the business that might be good for 5 years? There's some businesses that lasted, 50 years, not many, right? So I would say it's like property is a 500-year time frame, a building or a platform is a 50-year time frame, a business is a 5-year time frame or 10-year time frame. They've all got different risk reward. It takes a lot more capital to own the property. It's capital intensive, right? You can start a business in New York City today and you can rent the space for a year, right? It doesn't take a lot of capital to start the business. To build a building is intermediate capital. How much capital do you need? What's your time frame? What's your risk tolerance? Bitcoin will be regulated as property and you'll pay property taxes on it and you'll have to disclose. I cannot transfer, $1 billion of property from here to Africa privately without paying taxes on it. On the other hand, an application, if you're going to get in the insurance business and you're going to sell life insurance on a DeFi network to a consumer, you're probably going to get your door knocked on by an insurance regulator that's going to say, you sold life insurance and you violated the following, life insurance restrictions. You're overcharging or undercharging or whatever you're doing. And if you're going to trade stocks, if you want to trade Apple stock as a token on Saturday night in the United States of America with quintuple leverage, the SEC is probably at some point going to say, it looks like you're an exchange. And since we've already said you can't trade with that kind of leverage on exchanges, we have a problem with you doing it. Or if you're going to trade commodities, the CFTC is going to say, American citizens trade commodities in competition with the CFTC. There are rules, right? Like, everybody's got their regs. So if you want to trade Eagles music on an NFT network on a platform and you're actually going to upload it, try uploading an Eagles music video to YouTube and see how long it lasts before they rip it down. You're like, well, that's fair use. Can I just use, the music from the Eagles in the beginning track of my podcast? And the answer is no, you can't. Okay, so I think that as you build application functionality, you're going to invite application level regulation from the jurisdictions where you do business. And it's going to be slower. It's going to take a while for people to figure out what they think about it. And it's going to be very asymmetric and jagged, right? Like some jurisdictions will move more aggressively faster than other jurisdictions because of their political sensitivities. So that's kind of what I think will happen. And if you're making investments, you kind of have to figure out, jurisdiction am I in, right? El Salvador said, we're not going to charge you tax if you transfer Bitcoin. Okay, well, if you're an El Salvador citizen, that's a great thing for you. But if you're a United States citizen, you're going to have to surrender your passport and be an expat for 10 years before that's going to be a good thing for you.
In his discussion, Michael Saylor highlights why Bitcoin represents the pinnacle of property, destined to surpass all other forms of assets. Drawing a distinction between digital property, currency, and applications, he emphasizes Bitcoin's unparalleled durability and integrity. Saylor suggests that while digital currencies may prioritize compliance and compatibility, Bitcoin's inherent strength lies in its independence and resilience. Saylor's insights underscore the transformative potential of Bitcoin in reshaping the landscape of property ownership. As he envisions a future dominated by digital assets, he positions Bitcoin as the cornerstone, with its unique attributes setting it apart from conventional forms of currency and property. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.